Hey guys, we are back with another video, and today I wanted to go over just basically documenting what I do for my Forex trading routine. Today is Monday. Tuesday is the day I'm going to trade. I didn't trade today because there was just no news today, but Tuesday there's Euro, GBP, and US dollar and odd news. So that gives me 4 different types of setups that I could potentially look for because of the 4 currencies that are actually going to be moving. So the first thing you guys want to do when you're trading is you want to, like I said, go to the news, the economic calendar. Tuesday, 3:30. I usually trade New York session, so I tend to not look at like Euro for the 3:30 a.m. or the 4:30 a.m. But Euro session, London session, it also overlaps into the New York session, and because of that, you can still get into a setup after the news. So usually I say you find a trade setup before or after the news. But if you can't, but if you're trading London session and you're only trading the crossover during New York session, then you only can trade after. So you're limited on finding the setups, or that's how I trade at least. But yeah, so I'm mainly going to be looking at the U.S. dollar and the odd as my trading setups for tomorrow. I'm probably going to be trading this during post London liquidity for the U.S. dollar, and if I don't find a setup before or after news, then I'm going to trade Australia dollar. Odd CAD is my number one favorite Forex pair. Right now we're on GU, but I just wanted to use GU as an example because the GU also has the US dollar pair in it, right? It has the US dollar currency, and that's gonna that means that this market is also moving, right? So the British pound is the currency that dominates this pair, but the United States can dominate this pair if the market isn't moving for GU, if there's no economic activity for GU. So what I'm going to do is tomorrow I will get on the charts before, right at the beginning of New York session, and usually that's when I look for my trading setups. And Sundays are when I do my market structure and Sunday structure. So that means I clear out the charts like I'm about to do now. So let's say I know today's Monday, but I'm showing you guys what I do on Sunday, which was yesterday. I clear out the charts like that, and then right now we're looking at GBP USD. So on GBP USD, I zoom all the way out on my chart, and the reason I zoom all the way out is because it shows me the highs and lows that are relevant inside this trend. So we obviously know without looking at anything that the trend for is bullish for GU, right? Because why? We have all this price action going up. We have higher highs. We have low. I'm sorry. We have higher highs and we have higher lows. The lows are getting higher and the highs are getting higher as well. And that hence on the 4-hour is a bullish structure. So what you do is you first identify structure. You first want to identify your market structure by placing your highs and lows. And so you would do that by doing this. Your current high is this. Your current low is here. Okay? And let me get rid of this big ass arrow. Alright, so your current high, current low, previous low. Our previous low was here, right? And that was lower. And our previous high was here. And so now that we have our long-term trend for GU, which is what I use the 4-hour time frame for. I use the 4-hour time frame when I'm trading Forex for my long-term trend to know where price is going on the long term. And then I actually go on a 1-hour, 15-minute, 30-minute, and then I look for short-term structure and I trade that in correspondence to the long-term trend. But yeah, and sometimes I won't do that. Sometimes the long-term trend will be bullish, but then if it takes too long on the short-term trend to get to the bullish demand zone I'm looking for, I'll sell on the way down. But right now I'm looking for a buy setup. So in order to buy and get into a trade on GU, I need to see the market come up and I need an interruption of the trend. If the trend is going to continue being bearish, that means that the market from this point right here, right? That means from the market this point right here is going to continue to go down, right? So if the market doesn't break above this previous high, any of these previous highs, and it just reverses from where it's at right now at this, for example, let's say supply zone or imbalance gap, then I'm not going to look for a trade. So just because the market structure is bullish doesn't mean I'm going to just press buy and look for buys right away. I need to see some bullish proof. But technically, we also have some down here too, because if you look up down here, where we first had some uprising and bullish activity, we had the low here, right? We had all this bearish, and we had a low here, and then from that low point, we got higher, and then we got higher where? Right there, where the arrow is pointing to. That blue line I just drew that is now the color red, that is our point of break of structure. So the market broke structure because this was the structure down here that was maintaining the bearish trend, because in the past we have all these lower lows, right, and lower highs, meaning that the structure is bearish, and price came up and broke this red line, hence broke that structure, and then we had a retracement back down a little bit, and then price immediately shot up, showing you that the trend is bullish and that it could potentially continue to be bullish. And so that's usually the way I will enter. And I'm not really gonna enter on this chart here. I wouldn't buy here personally yet, because that's not strong enough demand for me to buy, especially because if I look on a 15-minute, you see on the bottom where the red and green is, there's no significant bullish demand here. So that's another reason I wouldn't really buy into this trend right there, because there's no significant bullish demand showing on the 5 to 15-minute. So yeah, but that's another thing. The 5 and 15-minute time frame is a time frame I use for confirmation that there's bullish and bearish demand or supply, by turning on the volume chart like that and seeing and zooming in to where I'm at currently, and that's how I use my volume analysis. I don't just leave the volume chart on, but 4-hour chart. So yeah, so I would want to see price, guys, at least on the 4-hour break above that supply zone, which is right there. This is the supply zone for the 4-hour right here, our most recent supply zone. When price breaks this supply, we can look for buys, right? Give me 1 second. Okay, guys, sorry about that. I don't know if you guys can hear me or not. But yeah, so once the supply zone is broken, and you can even label it too so you don't forget, you can put an alarm, or you put 4-hour supply, and then set an alarm on TradingView when price reaches that supply zone, or when price breaks the zone, right? I would just set it when price reaches the zone. That way you can see if price is going to go downward and continue downward. So you can draw a line like that. You can draw a line like this. It's orange or whatever, and you can press this add alert button and set an alert. And that way you won't miss your trade setups too, if you don't have, your limit orders and shit. If you're not actually taking a trade and you're just waiting for a price to move or change, it's wise to actually set trading alerts, right? So yeah, and that's pretty much what I do. Market structure is usually the first step when I'm trying to find a trade setup. And when I find a trade setup, when I find market structure, I know if I'm going to be bullish or bearish. So right now on this pair, I would only look for buys, not sells. If I want to sell, I need to see price come and react from where it's at right now, go up, go down, go up again, and come down, and then I can potentially identify that high and low and then trade within this range here. But we're not there yet, and we're not doing that because the trend is bullish, so I'm not really expecting that to happen. But that specific reason is why I have the mechanism in place of me, like what I told you guys earlier about waiting for price to actually go and disrupt this trend. So if I'm buying, I have a confirmation in the system in place that lets me know when to buy. So I don't buy unless this price breaks above this gray box, which shows me that demand is greater than supply. Because if supply was stronger, it would reverse off this supply zone, right? So yeah, that's pretty much what I'm going to be doing, and I hope you guys found some. This wasn't supposed to be a long video. I only kind of document what I'm doing now. This is basically what I'm going to be doing for tomorrow. I'm also going to look at Swiss franc. I'm not really a bit. Do I even have Swiss franc? No, I don't have Swiss franc. I'm going to look at UJ, because I'm expecting UJ to actually fall from where it's at right now and come down here. But at the same time, structure on a higher time frame is bullish. And why is structure bullish on UJ? Because if we go on a daily chart, I know that's a strong time frame to look at for your structure, but you'll see why. If we go on a daily chart, our current low, our current high, our previous high, our previous low, right? And then we had a little high and low in between here, right? But here's how we know we're still in the bullish trend. Until price comes down from where it's at, because price right now is in a consolidation range, right? Until price comes from being in a consolidation range and breaks downward, I'm not going to sell until I see price go like this and retrace upward and go down again. Then I'll buy within that range, right? But if I see price do what it's doing right now, because we're in a bullish trend according to the daily time frame on these highs and lows. Because if I go on the 4 hour, if I zoom out on the 4 hour, that's also a bullish trend there. So the daily time frame is just a time frame I use to confirm the 4 hour, and you can write that down too. The daily time frame in trading, well, this is my strategy. The daily time frame is a time frame to confirm the 4 hour chart / time frame. And yeah, I would have wrote that down, but I was being lazy, so I hope you guys wrote that down. And right now, since I'm expecting JPY to be bullish, what I'm expecting is price to go from where it's at right now, and I'm expecting for some demand to break out like this. And I'll actually change the color of that red to green to represent demand. So when price is green like that, or blue in my case, and it breaks above these exact structures. So when price breaks this structure, well, it technically did here. When price breaks more of these structures up here, I'm going to look for a demand blue giant candle, a demand zone to enter off of, and then I'm going to probably target the next liquidity, which is this high right here, or a higher high here or up here somewhere. But the key to finding actual setups, if you're a supply and demand trader or a smart money trader or institutional trader, is to actually get good at market structure. And yeah, that's it. That's all I have for today, guys. You can message me if you guys have any questions. But yeah, peace out.